Feroze Aziz is Deputy CEO of Anand Rathi Wealth, joining us with his take on the Indian market. Feroze, it's good to have you on the show. Thank you very much for your time. What is your own view on the India story right now? Because the market in the last few months has not moved a whole lot. We've been circling around 7,600, 7,800 whereabouts in a tight range. 17,000
Yes,
rather.
good morning. Good morning, Tanvi. So what's happened over the last couple of months, which is 1st of April till now, which is how we look at it in India for this financial year, we are up about 6%, which I think is a great bounce back from the March lows of about 16,900. I think India has gone through about a year and a half of time correction. In spite of having earnings growth for the last year closing at about 8% for Nifty, it moved up from 772 rupees to almost about 840. If you look, if you just ignore the Axis one-time expense on Citi consumer banking business being bought out. So I personally think the financial year has been good. Last financial year, there was just a 1% movement in the full year. Now, in the last couple of months, we've seen about 6%.
We have, and I know the currency depreciation right now is because of RBI intervention, but do you not feel like the currency should reflect the underlying fundamentals of the economy if there is so much interest in India?
Yes, Tanvir, I personally think it currently does. The large portion of the depreciation is because of the dollar strengthening rather than the rupee depreciating. In fact, to my mind, from a long-term perspective, the Indian rupee is going to be far more stable because if you look at interest rate parity, the interest rate differentials between these two economies have come down significantly. If you look at the Fed having moved up their rates about 5% from the negative territory to where they are today, India is still the differential interest rates now we've moved to about 6.5% repo and stayed there for some time. So I personally think that interest rate parity, which is nothing but the currency depreciation long term, is going to be at the rate of the difference between the two currencies. That's narrowed significantly. If you look at the last 15 years, the average depreciation of the Indian rupee compounded is about 2.83. I personally think that's what the provision from a foreign investor should make on a yearly basis. And thirdly, I personally think the inward remittances have been robust. The service sector exports have been phenomenal. So I personally think it is been stable for a few months there. And I think that's good because any foreign investor should provision for a 3% depreciation any which way because of the interest rate differential.
How are you looking at Indian banks? I know that the broader view there is that the banking system is robust, resilient, strong. Despite the rate hikes. In fact, the rate hikes have helped the net interest margins. But if we are going in for a pause, do you think some bit of that rally is baked in?
Yes, I think that we have rightly analyzed that the Indian banking system has been relatively strong because the shocks are very, very minuscule. If you look at the 10-year GSEC of India, surprisingly, there has been about 2.5% repo rate movement from May last year or April last year. And we have a 10-year GSEC having moved down by about 20 pips. So the treasuries of the Indian banking system are not losing money because long-term bonds have not gone up. It's only the short end of the yield curve which had been squeezed after the COVID, especially in the 2 months of 2020, March and April, and even May. The repo had been brought down to 4%, and there was also some degree of liquidity infused in terms of long-term repo, LTRO. And that has been taken away. So 4% going back to 6.5%. The repo rate average for the last 10 years has been here. The highest repo we have seen is in, I think, 2015, 8%. So the Indian banking system, this is business as usual. Because if you look at the inflation numbers for India, which is 5.8% average, and we are at 4.7 today. So I think the Indian banking system is far more robust, unlike the US, especially the regional banks, which have had some trouble.
Right. I also want to talk about autos. And, you know, we've been discussing with a lot of our guests about the whole EV revolution around the world. What role do you think India can play in that? And how soon can India join the race in terms of the lag effects that we are seeing there, in terms of India just falling behind as far as scaling up production, scaling up the supply chain is concerned? And what are Indian autos doing in this regard? How much of that premium is in the price? How much is left?
I think the Indian auto sector has shown stupendous growth, almost about 200% growth in terms of earnings, of course, on very low basis post-COVID. But I think the EV revolution in India will take a long period of time because the infrastructure for EV, which I think is a very complex variable for India to solve, given the size of the country and the kind of infrastructure we can develop in short spans of time. So I think the lagging behind will be something which is going to take some time for the gap to be bridged. Point two. Point three, I personally think the auto sector is also a little divergent in terms of, like, for example, Maruti India is planning to double its capacity in the next 5-7 years to 40 lakh cars. So I think the lower end of the segment in terms of the car, the demand is going to shoot up dramatically. I think the two-wheelers still to pick up. The rural demand in the auto sector is also
Feroz,
picking up.
when you say that the EV infrastructure is not ready, India is not EV ready, so to speak, from a back end, front end perspective. Isn't that in contradiction to India's climate goals? Because at the end of the day, when we speak to steel makers, when we speak to the manufacturers in India, they are doubling down efforts to really transition to new energy.
Yes, Tanvi, you're absolutely right. There's a difference between a strategy and its implementation. Implementation has a lot of complexities in a country which is so diverse as India. So I completely concur with you that the aspirations on the climate goals and also going to energy, clean energy, is going to take its time, but the efforts are being made on the ground and it's quite visible. But you're so right in anticipating its lag. And I think it'll take its time because implementation of a strategy in a country like ours, which has several states and reasonable important political complexities to solve before that can hit the road. Actually.
So realistically, what you're suggesting is people should almost expect EV adoption and I suppose the EV rollout of the infrastructure and everything else just with different characteristics, with Indian characteristics, because you're talking about the low cost. There's also the potential of motorcycles, but the difficulty remains on the electricity front, right? And that's what you're basically talking about. Nonetheless, in terms of the other associated infrastructure that it will require.
Yes, so what I'm talking about is basically the electricity and its availability. I think Indian metro cities are going to go through this transition and the paradigm shift far more swifter than the broader India, as we call it in the Indian context. Bharat, India is just about some metros, about tier 1 cities or tier 2 cities, about top 10, 15 countries. It's going to be simpler because there's a structured housing. And I think their electricity is not going to be so much of a challenge. But India is a very, very large country. So that's the context in which I was saying the slowness is going to be difficult to bridge.
Okay, Feroz, lovely chatting with you. Thank you very much for stopping by and joining us this morning.